So the stock market and business world had a pretty down day today. So we're going to talk about that. We're going to talk about Apple's corporate tax breaks, Donald Trump, Amazon Groceries, a Wells Fargo scandal, and the stock winners and losers of the day. So anyways, let's get started here. So let's just cover, the sectors that were down today, why the stock market was so bad today. So number one, we think that the stock market was bad today because of the Federal Reserve rate hike yesterday. That's probably the reason why the entire market was absolutely terrible today. Although there wasn't any giant reason, but we think it's because of the Federal Reserve rate hike. Plus, the Federal Reserve, in their statements, they were saying how they weren't too confident in their economy going forward. They're kind of like hawkish, like keeping an eye on the economy over the next year or two. So apparently that just made all the confidence from all the investors just go down the drain. And so that's why all the markets were bad today. So sectors as a whole, everything was down except for utilities and industrials. Luckily, I just invested in those yesterday. You can check that out, stock market program, in the link below to see what I invested in. Anyways, real estate was also up today, but as a whole, technology was down 0.5%. Health was down, financials were down, energy was down, consumer staples were down. Everything was pretty much down today for the most part. And so we're going to get into some more specific stocks later on in this video. But today we want to cover some news that was happening today. So the very first thing I want to talk about was the corporate tax breaks that are coming to Apple and to large corporations as a whole. So for those of you that don't know, Apple holds about $286 billion in cash, in actual cash, not assets, in cash overseas. $286 billion. And so what Trump was saying, and has been saying for essentially 2 years, even before he became president, was why don't we just allow them to bring the money back for a one-time corporate tax break, okay? So for those of you that don't know, the current tax break, the current corporate tax rate, for the upper corporate tax rate is 40%. I think it's 40%. Yeah, it's 40%. And so, companies don't like paying that. That's the highest corporate tax rate in the world. Canada has 30-something percent, 35%, I believe. But if you go over to some places in Europe, you go to some places in Asia, the corporate tax rate is 10% or 0%, 5%, 7%, 15%. And so these companies, they're saving not just billions of dollars, $100 billion by just moving the money over there. So that's what Tim Cook actually commented on this right now. So I'll read part of this article. Part of it was from CNBC. And so what they say, I'll read this. President Trump spoke of reparation holidays during his campaign, targeting a one-time tax rate of 10%, which is much less than the corporate tax rate of 35%. So it is 35%, not 40%. But Trump has not committed to whether the plan would be voluntary or forced. He might force them to bring their money back at a certain rate. So Trump has also suggested that chopping the corporate tax rate in more than half to 15% as part of his tax overhaul. So what do I think about this? What do I think of corporate tax holidays? So I think that, what Tim Cook he had a quote here. I'll read what Tim Cook, the CEO of Apple, said. So he said, that's not the I don't even know what that word is, parochial view of what's best for Apple. That's the view of what's good for America. So he thinks that it's good for America to cut corporate tax rates down. I think that for these corporate tax holidays, it's okay. I think that right now it's good. I think that the corporate tax rate is too high in the United States, which is why the money leaves. However, do I think it should be cut down to 15%? That's probably a little bit much. Maybe 20%, at least be competitive with the rest of the world. This isn't even competitive. That's why, America's big companies, they don't pay any taxes. They just move their money overseas. And they pay dividends to U.S. shareholders by taking out debt. It's a long, complex system. So what this would do was, if Apple were to bring back $286 billion back into the United States, all of it, then $28 billion would be pumped into the tax pool for the United States of America. That's a ton of money. And so they could either take that, the $28 billion in tax revenue, the government could, or they could continue letting it sit overseas and collect no money from it. So I think it is a good thing. However, it's not promoting, it's rewarding people for keeping money overseas, essentially. So I don't like that aspect of it. So this article also said here, Tim Cook said, I think when you begin to open the door to things that people want, it doesn't close. Cook said on tax relief, it just keeps opening and opening and opening. So people want this as a whole to bring the money back over here. So there was one more thing I wanted to mention about this, about the tax breaks, was that, so it also says here that the statement is surely true for companies that hold their overseas and offshore, their overseas profits offshore and hope the US government eventually cuts them a break again. Companies were offered a 5.2% reparation rate in 2004 and brought home more than $300 billion during that voluntary holiday. So apparently this has happened before at a 5% rate in 2004 under President Bush. And think about that. $300 billion, all the companies brought back in 2004, Apple would do that on its own. Now think about if other companies did that. I'm sure, I don't know if Google has a cash reserve. They might. Google might have one. I'm sure a bunch of the giant tech companies have one. Anyone that pays a dividend probably has one. And so think about that. Think about, that could be almost $100 billion if all the tech companies do that back into the American taxpayer system. That could be what I don't know how much tax revenue the US government brings in. Is it $1 trillion, $2 trillion? But that's a significant portion added to the tax pool. So I think that it could be a good thing. It's just promoting companies to keep doing this to get tax breaks over the next 5, 10, 15 years. So that's my opinion on it. What do you guys think? Do you guys think that companies should be allowed to have corporate holidays like Apple is going to take? Most likely a 10% one and a 10% corporate tax holiday? I mean, I think I'm a fan of it, but I think the long-term solution is not that. The long-term solution would be just lowering the corporate tax rate down to 20%, 25%, 15%. So, I mean, what the corporate tax rate is doing right now is it's not hurting Apple. It's not hurting the multi-billion-dollar companies. It's hurting the million-dollar companies, the multi-million-dollar companies that are like mom and pop run, right? The startup companies. That's who they're hurting. They're not hurting Apple. They're hurting the young companies that are trying to grow, but they're being taxed up the yin-yang for that, almost 40%. So that's my opinion on that. What do you guys think? What do you think of this corporate tax break? Do you think it's a good thing? Do you think it's a bad thing? We're going to move on to the next topic here that I want to talk about, which is the Amazon Groceries. Okay, so for those of you that don't know, I didn't know this until today. I knew about something we're going to talk about, Amazon Go, but Amazon has this thing called Amazon Fresh, and I just learned about it today, and it just makes sense. So they have begun testing Amazon Fresh, which is a grocery delivery service. They've been testing it in some states in the United States and in the United Kingdom. And I think that this is one of the biggest untapped markets in the world right now. I know Walmart actually, I did a report on Walmart last week, I think. Walmart is trying to deliver groceries using their online service, and Amazon already has that infrastructure set up perfectly. I mean, they are all over the world. They have Amazon Prime places all over the major cities in the world. They would be perfect for this in terms of delivering the groceries. So would Walmart too, to be honest. I think it's going to be a race. I think that I was actually seeing a report today that Walmart might actually beat Amazon to this punch here, to this Amazon Fresh, because Walmart has the grocery aspect already set up. They just need to get the delivery service better. And Amazon has the delivery service set up, but they just need to get the grocery aspect better. Which brings me to the next point here. But why I want to talk about Amazon Groceries, Amazon Fresh, is because of Amazon Go. I saw a report recently. For those of you that don't know, Amazon Go is... you might have seen the trailer for it. You can pretty much walk into a store, you swipe your Amazon app right when you walk in, right when you go through the turnstile, you swipe your phone just like they would at a ticket at a concert or ticket at a sporting event. You swipe it, and you walk in, you just literally grab things off the shelf, and you probably have your own bag. You bring in your own bag or own bags, and you walk out. There's no cashier, there's no transaction. You're using your Amazon app, and it automatically knows what you bought as soon as you walk out of the store, and it deducts it from your account. Okay, so it's a really creative idea, Amazon Go. So they're actually getting into the grocery aspect of retail, I guess. And so the interesting part I wanted to mention here, why it's interesting today, even though they announced that months ago, was that they've already been doing beta testing for a few months now, and it's been going very well. And they recently hired, for that aspect of the company, real estate managers. Oh, so this could seriously be taking off really soon. They could be the next giant grocery retailer and delivery service. And so that's really, really interesting. So if they were to get into that and take over the market share of other grocery companies, I mean, think about, Amazon's already a top tech company in the world, but now they could be taking market share from Walmart away, from Costco, from other giant grocery companies. So that is something for you guys to look out for. Amazon stock is really, I still think it's overpriced right now, but in the long run, I mean, if this goes through, they could be easily $1 trillion company in the next decade. All right, maybe 2 decades, maybe 15 years I'll give them. So maybe less for all I know. So that's something that you guys should look out for. Amazon going into Amazon Go and Amazon Fresh going into groceries. So the next thing I want to talk about is actually, before we get into the Wells Fargo scandal, I want to talk about something that Trump was saying. So Trump was having this press conference, I think it was yesterday, or was it this morning or last night? That's when I saw the video. So he was pretty much just saying a bunch of the stuff he always says. No other president has gotten rid of more regulations quicker than I have, ever. He's gotten rid of more regulations ever, and it seems like every week he's actually just signing executive orders. And so this week what he did was he signed an executive order to actually lower drug prices, which was quite interesting. I mean, yeah, I'm gonna see what the left says about this and what the right says about this. The right is going to be like, hey, you shouldn't be controlling drug prices, and the left's going to be like, probably just ignore it because it's something that they want. They want lower drug prices. So that actually really affected the market today. And so biotech as a whole and pharmaceuticals were down almost an entire percentile after he said that today. I don't know if the federal rate hike influenced that as well, or if Trump influenced it at all, but he signed an executive order today to lower drug prices. And so all the pharmaceutical companies took a hit today. He also said something else too, about he wants more apprenticeships and less college education. Like he wants a lot more people going into apprenticeships rather than going into university or college, so that he said so that they can earn while they learn. So what do you guys think about that? I mean, I actually agree with that. I do agree that people should be going into more trades, or even even an art kind of thing. I think that a lot of the college education, like I don't know, psychology and stuff like that's, why do you need that? You know, arts is you probably don't need that either. But what I'm trying to say here is that, you know, you're getting into so much debt in university these days. It's a good idea to go into a trades or an apprenticeship right now. You get paid, plus you get to go into a career field where you're probably going to make $60,000 to $100,000 a year. You're not going to end up with a useless liberal arts degree where you end up working as a barista making $35K a year. So that's my opinion on that. What do you guys think? Do you think that more people should be going into apprenticeships? I agree, but maybe you don't. So last news thing before we get into specific stocks today that I want to talk about is actually Wells Fargo. So they had a giant scandal last year. I think that it was something to do with employees being told to lie to the customers, or that the employees were forced to get X amount of clients or customers or else they're fired, or open X amount. Oh yeah, and they opened a bunch of fake accounts, like hundreds of thousands of fake accounts. So that's what I think the scandal was last year. And now they might have another one on their way to their doorstep. So it's a class action lawsuit now. It's very small right now. They just announced it. It's only 7 cases right now, but that could balloon up to more. You don't really know. So it's a class action lawsuit. So allegedly what happened was Wells Fargo made unauthorized changes to mortgages, only in 7 cases, okay? And so usually what you're supposed to do when there's a change to a mortgage is, one, you're supposed to inform the customer about everything that happens. You know, this is going to happen, this is going to happen, this is going to happen, sign here, read it over and sign here. That's what's supposed to happen. And if those consumers are going through bankruptcy, like all of these 7 people were, you're supposed to tell the bankruptcy court. You're supposed to tell the court about the changes that are happening, as well as the consumer. So allegedly, they didn't tell any party about the changes. And so what the changes were what they told the customer was that we have a way of getting your payments down by X amount, as long as you do this, 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 and this. And now they didn't reveal everything, but what it essentially meant was that they were getting the payments down for people going through bankruptcy. They were knocking them down so that they could keep their house. However, what they didn't tell them was they were extending the length of their mortgage by over 2 decades. So that's a pretty big problem there if you are extending mortgages by decades. So I see both points of view here. I mean, it's good for the customer in the short term because they get to keep their house. And they've already probably pumped in tens of thousands or hundreds of thousands of dollars into their house, of equity into their house. And so losing that is a big loss. And so by doing that, by cutting their monthly payments down in half, it's a good thing. All right? It's a good thing. However, they're going to be in debt for a much longer time, which is bad. The real bad part is just you're not telling them the specifics about what's going on here. You're not telling them that they're going to be in debt for an extra few decades, and you're not telling the courts about the change to the mortgage. So that's the problem here. That's the scandal. Apparently it's happened 7 times. 7 people are on the lawsuit. It might grow to more. Right now it's a very small issue. I mean, 7 cases on average, 200 grand, I'm guessing, for an average mortgage. That's only about $1 million. However, their stock did take a hit today because of the scandal of roughly 1%, which 1% of Wells Fargo, we're talking $3 billion. The company valuation went down here. So they lost about $3 billion in value today. 1.16, yeah, so roughly a billion or $3 billion in market cap was lost today. So that's what I wanted to talk about. What do you guys think about this? I mean, I see why this is a scandal. I mean, you should be informing the courts and the customer. By the way, Wells Fargo completely denies this. So this is all allegedly. So Wells Fargo says this is completely false. We informed the courts, we informed the consumer. Maybe they lost papers or something, or maybe they're just making claims out of nowhere. That's the stance of Wells Fargo. So what do you guys think? I mean, I actually understand extending your mortgage 2 decades to keep your house. I mean, I understand that. That's good for the people that want to stay in a house and not have to rent and not have to give up hundreds of thousands of dollars in equity. I get it. So I get it from the Wells Fargo's perspective. I get it from the consumer's perspective. So what do you guys think on that whole ordeal? Let me know in the comments below. Do you think it's a good thing? Do you think it's a bad thing? And do you think that it's true? Dun dun dun. And the very last thing I wanted to talk about today was the winners and losers in the stock market. So let's take a peek here at the losers first. So I was talking about how Mattel had a really good day, I think yesterday or 2 days ago. That didn't last too long. So Mattel is the tech stock, the toy company that's been around for what, 60 years or so. They cut their dividend down. I think that's why the stock went down today. They cut their dividend. Oh, that's why. Okay, so here's what happened. They cut their dividend from 6.68% down to 2.93%. And because of that, the market reacted and the share price dropped by almost 7%. It dropped almost 7% in, oh my God, pretty much 30 minutes. So this is hell for day traders that bet on it this morning. So it dropped 7% today. They are the biggest loser today. It's not even close, and understandably so. They cut their dividend in half. That was the only reason why people were investing with them. And I mean, but you got to do what you got to do. If they don't have high earnings, you know, you got to cut down your dividend. You got to save some money so that the company can keep existing. So their market cap is at 6.8 billion currently. Another big loser today was Nike. Nike, I had a big gain with them a few years ago, but they were down 3.25% today. Pretty much, I can't really see a good reason for it. It was just people were talking down on it today in the public's eye. So I'm guessing that this has something to do with federal rate hike, the fact that a lot of retail stocks are down today. Maybe the market is down today as a whole, and Nike just got hit hard today. That's pretty much it. Kramer says Nike CEO. Mark Parker is the wolf in sheep's clothing. So maybe Jim Cramer single-handedly knocked down that stock today, for all I know. Target, big loser today, down 3.8%. They pay by the way, they pay a 4% dividend, 4.3%. I did not know that. That is quite interesting. So Target they're down 4% today. Sorry, just got updated after hours because I'm filming this actually after hours today. And so they've taken a big hit the last 5 days. I mean, in the last 5 days, they're down, Yeah, roughly 4.3% or so. I think they might even be down more than that, almost 4.5 to 5%. So they lost 4% today alone, and there isn't really, it was just the market was down today. There wasn't any big news out there about them today. Just Target's down today. The biggest loser, actually, was not Mattel. The biggest loser of all today was Kroger. And this is one of the biggest drops I've ever seen in a day. 18%. For a company that's $22 billion, losing 18% of your value in 2 or 3, it was 3 hours, 4 hours this happened. I mean, that's absolutely ridiculous. We're talking about $5, $6, $7 billion just evaporated right there. So the reason why, there was actually reasons behind this today, was because their earnings outlook is dramatically lower. They announced it today. Their earnings outlook is dramatically lower than it was yesterday. And so that's why they dropped down essentially 20% in one day. Let's see what else we got here. Whole Foods, again, a similar story. Earnings outlook is down. All essentially grocery retailers got killed today for the most part. And so Whole Foods is down 6.7% today. Pretty big. I mean, groceries are getting killed right now. Let's see, we already talked about pharmaceuticals. Wells Fargo, yes, so we talked about them, down 1%. Now we're going to move on to some of the winners today. And then I want to talk about one stock, which I'll get to in a second. So winners today, CBS, up 1% in a day where most companies were down. CBS up 1% today. I like them as a company as a whole. I mean, not as a company as a whole, not to invest in, not to invest in. I like the products they put out for the most part, apart from their sitcoms. So Sony's up today. Sony's up almost 2% today. Good for them. Oh, this isn't updated though, is it? So as of 3:15, that was over an hour ago. As of 3:15, they're up 2% today. So pretty good. So, Sony had a good day. I'm guessing E3 might have had something to do with it. A lot of the video game stocks are up. H&R Block had one of the best days today, up almost 2.5%. Again, no good reason for this as far as I can tell, but hey, they had a good day, H&R Block. And same with Harley Davidson, up 3% today. By the way, they pay a 2.6% dividend. So not too bad. H&R Block, though, I mean, they're a financial company. They pay a 3% dividend. I might take a deep look into them and see what happens. I might do that on my own programs, which you can sign up for in the link below. So anyways, those are the winners and losers of today. I didn't really want to talk about Google and Apple and Facebook today. I will just give them a quick shout out. Amazon down 1.2%, Google down 0.8%, S&P 500 down 0.2%, NASDAQ down 0.5%. Tesla finally has a really shitty day, down 1.4%, so they are not a stock of the day today. I like them as a company, but I'm just super happy that they didn't defy the laws of investing today. Let's see, Apple down 0.6%, Facebook down 0.3%, Nvidia up 0.43%. Ooh, I actually made some money today on the down market. I actually made some money. Nice. And 2 of my stocks are up, but you'll have to check out my stock market program to see what those are. So that's going to wrap this video up. What do you guys think of the news of today? Did you like it? Did you lose money today in the market? Did you gain some money? What do you guys think? So thank you very much for watching. Check out my stock market program down in the link below. I give detailed stock breakdowns. I'm doing stock searches. I talk about what I'm specifically investing in and how much money I'm investing in those companies, what I'm looking for. You can check that all out in the link below. And if you just want to learn how to invest in the stock market, you can go ahead and do that too. I take you from not knowing anything about the stock market to actually setting up an account and making your first trade. It isn't for day traders, it's for medium to long-term investors. I don't want to deal with fucking day traders. If you're a day trader, just don't even look at the program. Maybe you can see what I'm investing in, but if you're a day trader, you're not going to get much benefit from it. But if you just want to be a short, medium, or long-term investor, it's something for you guys to look at. So thank you very much for watching. You're all very beautiful people, and I'll see you guys in the next video.